First up, all eyes on the RBI policy. Majority of the street expects a status quo on interest rates. We'll get you a comprehensive coverage in the next half hour. So that is a big event you need to watch out for. Ahead of that, the banks are looking fairly upbeat, not too high on an up move, but definitely a good uptick being witnessed on most of the banking counters, including PSUs. Meanwhile, HDFC Limited QIP update, top funds buy big. That's something we're picking up from sources right now. You have ICICI Mutual Fund, Premji, Birla Mutual Funds, SPI Mutual Funds, GIC, Oppenheimer, Norges. These are the names that we're picking up from sources right now. Stimulus for MSMEs. Well, this is another ET Now update. Government may announce new stimulus for MSMEs. Cabinet Minister Nitin Gadkari said that there could be perhaps what we're picking up from sources right now is a talk on loan recast for MSME in tourism, hospitality, FMCG, manufacturing. 3 lakh crore credit guarantee scheme may also be extended beyond October 31st. Cabinet has approved already 3 lakh crore worth of credit guarantee schemes for MSMEs all the way back in May, so that could perhaps see a further extension. Airtel is in focus. Airtel Africa calls off Kenya Ops merger plan. An important update we're picking up from the Economic Times right now. So this counter also very much in the limelight. And on the earnings radar today, you have a lot of big and small cap names. HPCL, one to watch out for, followed by Indian Hotels, Whirlpool, Blue Star, Lupin, Canfin Homes and Vodafone Idea. So some names to keep on your checklist as far as earnings today are concerned. Moving on to COVID corner updates, India has recorded more than 4.5 lakh new COVID cases in the last 9 days. India's recovery rate increases by 3% in the last 2 weeks. India-Israel stay positive on rapid COVID testing. Tamil Nadu allows gyms to resume from 10th of August. Maharashtra registers 10,000 COVID cases in last 24 hours. Over 6 lakh COVID tests conducted in 24 hours, says Health Ministry. Cipla is working with the government agencies to find COVID cure. Zydus Cadilah's COVID vaccine enters phase 2 of trials. J&J forges $1 billion pact with US to supply COVID vaccines. And finally, you have China reporting 37 new COVID cases.
Okay, thanks for that, Karunya. Let's also get you guys up to speed with what the markets are doing this morning. We've had a really strong handover from America. NASDAQ made a new high, S&P and Dow all clawing back to Feb levels, which is essentially as if COVID never happened. So here today, we were expecting the breadth to be really positive, and it kind of is. You have 38 stocks in the positive with just 12 declines from the Nifty. And you even have broader names like a Zee, which have been under tremendous pressure, really up today, 3%. You have a GAIL up 2.5%, ONGC 2.5%. TCS up 2%, and then a Cipla up 2%. So some names we haven't usually been seeing that are absent from the leaders today. On the loser side, you have Axis Bank, Eicher, Maruti, and M&M that aren't looking too upbeat. So that's how it's kind of panning out right now. The bank index is holding up okay at 0.31% up, but the auto index today is one of the major losers at 0.6%. Mid caps are doing okay at 0.6%. And the next is also all right. In terms of volume today, just the largest volumes are being seen in Reliance, Bajaj Finance, HDFC Bank, TCS, and then Axis. And on the lower end, Tata Motors, Zee, SPI, ONGC, and Hindalco. So that's how the markets are kind of shaping up. But what's a really important development to track today is the RBI policy meet, which is going to be happening, and a lot to discuss. Maybe the interest rate is going to be changed by the central bank, and there might be some more stimulus measures announced, as well as an update of the current economic environment. But Poonam, who's been looking at these numbers really closely, is now going to walk us through what to expect.
Well, it's likely to be a close call in terms of the RBI repo rate cut. Well, 46% of the economists do expect RBI to cut the repo rate by 25 bips, but close to around 54% expect RBI to still maintain a status quo as RBI has front-loaded repo rate cut. Reverse repo rate cut expectations are high, close to around 54% expect 10 to 25 bips cut, and 23% expect a cut of 35 bips on the reverse repo front. CRR may be retained and also a accommodative stance may be maintained. In fact, the rationale for a repo rate cut is growth still remains fairly fragile. We're also seeing that demand side weakness is outweighing supply side disruptions, and hence the economy does need the monetary policy support. Having said that, RBI has front-loaded the rate cuts, and maybe RBI may want to pause this time before further cutting the rates. In fact, RBI may widen the policy corridor further and may disencourage banks in order to park the funds in the reverse repo window, so that banks should in fact be lending more to the economy, and hence more reverse repo cut may be seen. Having said that, RBI's commentary in terms of the growth and overall demand weakness would be fairly important. Commentary in terms of the negative real interest rates and liquidity, and also bankers have asked RBI not to extend the moratorium, and hence what are the possible options that RBI is looking at, and the commentary in terms of fiscal stimulus will be important.
Presented by RP Sanjeev Goenka Group, Growing Legacies.
Okay, another really important development for this morning is HDFC's fundraise. Now, just minutes ago, we figured out that the QIP has actually also been fully subscribed already. So, give you a background, the raise is totally amounting to 23,000 crore. Now, 14,000 crore is an equity issue. That's 10,000 fresh equity. You have around 4,000 crores of warrants. Now, the warrants have been oversubscribed 3.5x by the likes of Oppenheimer and SBI MF, Birla MF. They've all participated. On the QIP side, you've seen a 4x oversubscription with the likes of, again, an Oppenheimer, GIC, Tiro, and Norges Bank. So, subscription is clearly not the issue. Warrants 3.5x and QIP issue 4x. There's also, in addition to this, a 9,000 crore NCD raise, which is in the pipeline. So, that's what will finally make it amount to 23,000 crore. Seems like we'll figure out more details by the end of the day when the full block sizes come as to who bought how much. But nonetheless, it'll be really interesting to see that, Karanya.
That's right. That's right. But for now, let's come back to the markets. And we have Saurabh Jain and as well as Kunal joining in, as always, to talk technicals and fundamentals. Kunal, coming first to you. Straight to your picks. What are the stocks that look attractive to you from a trading standpoint?
Well, from a trading standpoint, I would look at a mix of buy and sell, Karnya. So first one would be a sell on HDFC, large cap name showing signs of weakness. And I believe even at current levels, the stock looks to be a tad bit more weaker for some more round of correction on the downside. So that's sell. Targets to be kept at 1740, stop loss at 1800 approximately now. The second would be a buy on a defensive name, and that's from the FMCG pack. It's a buy on Colgate, Colpal. That stock forming an inverse shoulder pattern and a consolidation breakout would suggest a buy for a target of 1500, stop loss 1420.
Okay, and Saurabh, what are your wealth creation bets?
The first stock I will recommend is Axis Bank. If you look at the bank has been consistently growing above the industry average. In the last quarter, they have grown their deposits approximately 17% and the advances too in line with that. If you look at the net interest margin, it is close to 3.4%. The net NPAs are close to 1.2. they have successfully raised. They are doing QIP, and it is learned that the book is already subscribed 3 times, more than 3 times. So there is a good amount of capital cushion. Before that, also they were having 17% capital adequacy ratio, and tier 1 accounted approximately 13.5. So I am optimistic about this bank, and we are keeping a target of about 550 for next 1 year. The second stock I would recommend is from the FMCG space, Colgate-Palmolive. If you look at the company has the April disruption. The operations have returned to normalcy. They have been focusing on the e-commerce area. Also, they have launched new products, especially the premiumization. They are doing premiumization of the Palmolive brand. They are doing certain new launches in the toothbrush and in the paste segments. They have launched kids toothpaste also. So I guess the volumes were little lower in the June quarter, and I guess they would be able to gain market share in the toothpaste segment. So we are keeping a target of approximately 1,650 for next 1 year.
Okay, great, Saurabh. Let's now move on to our queries, since we've got your picks out the way. The first query, and I think our only query for this morning, because we're running short on time, is from Nageswar Rao, and he's written to us from Hyderabad, and he's written to us before as well. And he's currently holding 1350 stocks of Vedanta, and he's been holding them for 6 years. So he's like, should I continue or wait till book building? And please suggest another bullish stock as well for the long term. So Kunal, Nageswar has 2 queries, one around Vedanta, as you've heard, and then he just wants a general pick as well, which you're bullish on.
See, I think the stock looks okay, and metal stocks are going through a comeback. Now, it all depends on the trend, what plays out globally. If the dollar index continues to, fall, this downtrend continues for some more time, and, the kind of liquidity we've seen in the global markets, if that continues to happen, then I believe that this rally which you've seen for metal stocks, it should continue to move up, significantly higher. You may even see, sharp upticks of 5, 10%, 15% on single kind of trading sessions. So metal stocks are capable of doing that. And I believe in that regards, these stocks can stand the chance of continuing to outperform. But then you have to keep a close eye on the global trends for, the dollar index specifically. And I think in terms of the other query which you mentioned, in terms of general stocks, I think even at current levels, there are a lot of large cap names which have, fairly looking, quite strong. So I think from the banking pack, I think ICICI Bank is one stock which, to me looks fairly attractive at those 335 kind of zone. I think it's an attractive stock to look at from a longer term perspective. You may even look at many of these auto stocks like Tata Motors on short to medium term charts. Even this stock looks a bit promising. So even if your time horizon is 6 months to 1 year, I think the stock can give some handsome rewards from that kind of a time frame as well. So I think there are a lot of variety of stocks, large cap, mid caps. It all depends on the risk appetite of the viewer and then the kind of time frame the viewer has.
Okay, thanks for that. Saurabh, let's also come to you on Vedanta, and then perhaps another call you're more bullish on than the ones you've already mentioned.
My sense is it is better to hold till the delisting process gets over. The company has given a floor price of approximately 87.5, and the reverse book building will tell us at which how the institutions bids at what price. If you look at the shareholding pattern, the promoter holds approximately 50.13, and for the delisting to get success, the promoter should have at least 90%. And this Vedanta, approximately 40% of the shareholding is owned by the institutions like the ICICI or international institutions, which are going to anyway participate. The company is also raising funds for the delisting. So my sense is better to wait for the delisting process. I'm also bullish on the IT sector. So my advice would be, if you want to, switch over some investments, or maybe for new investment, you can look onto the HCL Technologies. If you look at the results were better than expectation. The company has already given guidance that they would be growing approximately 1.5 to 2.5% quarter on quarter. They have been able to maintain their margins, and they have given guidance of approximately 19.5 to 20.5 range for the rest of the year. They are able to, they have been a good amount of deals in the June quarter, which were higher, in fact, from the March quarter, and the existing business for the from the existing clients also is getting renewed. So I'm quite optimistic. You can keep a target in your mind of approximately 800 for HCL Technologies.
Okay, great. So HCL Tech is a good buy according to Saurabh, and stay put in Vedanta. On that note, gentlemen, sorry to let you go early this morning. We're running short on time, but great to have you with us as always. We're going to take a quick break here on Buy Now, Sell Now, and plenty lined up when we come back.
Welcome back. You're still watching Buy Now, Sell Now. Time to focus on an individual stock, JK Laxmi Cement. They delivered their numbers last evening. It's been a steady quarter, though, yes, offtakes plunged YOY. There's been a bit of a significant dip coming in. The volumes as well down 18% year on year. Profits saw a steady expansion, though EBITDA was also down 14%. Let's touch base with the management. We have Mrs. Shailendra Choksi, the whole-time director, join us right now on the show. Mr. Choksi, thank you so much for taking time out. There was robust strength internally seen in cement prices because of strong pricing, low input costs. Can you tell us if this is a sustainable trend going forward? What is your projection?
I think we are quite satisfied in terms of the results, because we had expected, when our plants had got under lockdown and the entire market was closed from 23rd March onwards, our own apprehension was that probably a month or two would be a total washout. And it actually happened that April was practically a total washout from 23rd March to the end of April. And then gradually we started ramping our production facilities. The market also picked up started from the last week of April and picked up gradually by middle of May. So I think, therefore, in this situation, to have reached with just a minus 18% sale figure compared to the corresponding quarter last year, we feel greatly satisfied that things worked well and that we could avail of the opportunities wherever we could find one in terms of our sale. We could still manage a decent number. So we clocked a 18% fall in our sale figure, which compares well with the industry, which has seen a degrowth of almost 32 to 34%. And the EBITDA numbers are also, because the realization remained more or less as it was in the previous quarter. So we could, and we could also contain some of our fixed costs, especially in these times. As a result, we could manage with an EBITDA fall of about 20-21%, which we had apprehended would be much more.
Can you give us some color on the volume offtake? What was the capacity utilization trends? And did offtake issues persist in this quarter as well?
Actually, yeah. Let me start with the last question first about the difficulties in the offtake. There were logistic constraints to reach the market. I think there was some pent-up demand, especially in the rural markets, because they were the first one to open. The urban market quite some time to open. The rural markets, there were logistic constraints. There were a lot of inventory which was lying on the road when the lockdown happened. So to take a control of all those trucks, then to get back the drivers. Yeah, it was a huge challenge from the third week of April when we started mobilizing all these people, ensuring that the trucks which had our cement with them and lying on the road for about a month, that they reach the dumps or the nearest market. So initially we had a lot of challenges with respect to the logistic. Then there was a demand, a pent-up demand, because the lot of construction work got stopped in their tracks in the middle of nowhere. So they were wanting cement, but we had difficulty initially in the supply chain, which we overcame. And therefore, from middle of May, we saw some traction, and we could ensure that in the whole of June, the demand was good. We could reach the cement to wherever it was needed. And that is how we could manage with just about 18% loss in our volumes, Q on Q.
Okay, sir. And what is the current capacity utilization trends? Also, is there any demand for products currently? Is it moving in any particular direction, especially since both the infra and realty projects have been at a standstill?
In terms of capacity utilization, if I were to go sequentially, April was practically almost about 15-14% capacity utilization. May onwards we picked up, and if I were to only see my the kiln working, May and June, and we could reach about 70 to 80% capacity utilization. So if I were to only see how I worked during the days that we operated, cumulatively, all our plants combined, we did very close to 90% of our capacity utilization in the days that we worked. But if I were to spread it over the entire period, it would be anywhere around 65% capacity utilization.
Can you tell us how the situation is in terms of recovery post-lockdown demand that you've seen witnessing after lockdown, and rural demand? Is that the one that's aiding recovery?
Actually, in terms of the demand forecast, things are still very hazy at the moment. I won't say unhazy, very fluid and fairly uncertain. Because, now we are finding that almost from 21st of July, our eastern operations getting very badly impacted due to the lockdown. So you have lockdown situation in Chhattisgarh, you have a lockdown situation in Odisha, in part. Most of these states are observing lockdown during the weekends, only 5 days working or 4 days working in some of the states. So right now it's fairly uncertain, but we are pinning hope. And then, of course, there's a monsoon impact in the second quarter.
Thanks, Mr. Choksi, for joining us with the Q1 update. The stock continues to trade low by 3.5%. We're wrapping it up right here on Buy Now, Sell Now. We'll start off with the MPC coverage. Stay tuned to ET Now.